So Dr. Megan Evans is joining us from the University of New South Wales in Canberra. Her work focuses on understanding and informing environmental policy, markets and finance. Lots of you might have seen Megan before. She presents at forums around the country pretty regularly, including some through the Carbon Market Institute. And some of you I know would have seen her at the recent Regen Farmers Mutual event at Taronga Zoo. It was also online. She's known for her frank and fearless assessments and advice on markets and policy, and is in high demand as a speaker. So we're very lucky to have her joining us today to talk about the opportunities and risks in environmental markets. So I will pass over to her. Thanks so much for joining us, Megan.
Thank you, Rachel, and thank you to everyone for having me today. Is my audio okay for everyone?
Sounds good to me.
Brilliant. Yeah, really grateful to be here. I really have huge regard for the work of NRM Regions, so thank you for having me. I feel the need to apologise immediately as a certified people pleaser. I haven't prepared a huge presentation. I've kind of just got a few slides that I might speak to from the Regen Mutual talk, so there might be a bit of repetition for those who are there. But I just didn't really quite know exactly what you might like to hear about. So I'm hoping there's been more time for kind of questions and discussion. And, you know, I give you a little bit of background about what I do and what I've been working on. I've spent the last 15 or so years looking at biodiversity and carbon markets, particularly in Australia. So I was part of the team with Martine Marin and Hugh Possingham and others who helped develop the metric that underpins the environmental offset policy under the EPBC Act at the federal level. If you've interacted with that policy at all, you're probably going to complain about the spreadsheets, and that is completely fine. I'm very happy to hear any concerns with that policy and that calculator. We've also done a fair bit of work looking at the ACCU scheme, or the Carbon Farming Initiative, or whatever we're calling it now. And myself and colleagues Andrew McIntosh and Don Butler and others have been you know, fairly public in the last couple of years, voicing our concerns around the ACCU scheme and particular methods around that. And the last 3 years, I just recently finished a fellowship, which just basically meant that the Australian Research Council paid my salary for 3 years to look at biodiversity finance in general, and what is this thing, how is it going to operationalise, particularly in Australia. And as part of that work, did a bunch of interviews with a whole range of stakeholders, trying to understand how does this idea work in practice, you know, who's going to do what's going to happen. So I'm still, because I'm teaching this year now, I'm still having to write up that data, but yeah, relatively involved in trying to understand all this TNFD and voluntary disclosure stuff. So yeah, I really just kind of want to open it up to, if you have any questions related to biodiversity, carbon offsets, biodiversity credits, TNFD, nature positive, anything like that, really happy to kind of, you know, have a discussion. But I might just share my screen for now and run through a couple of things that might prompt some discussion. Hopefully everyone can see that.
Yep, looks good.
Great. I'll put it on the slideshow. That will probably mean I need to share the... You'd think after 3 years of this, we'd all be more proficient at doing this, hey?
Looks good.
So, brilliant. So as I said, there might be a bit of repetition from those who are at the Regen Markets event, but hopefully a bit more of a chance to ask some questions and, I don't know, yell at me about various things. So opportunities and risks. I'll start with, what is nature positive? We're hearing it so much at the moment. I think this week Minister Plibersek announced that there was going to be a Nature Positive Summit in Sydney next year. We had the findings of the independent review into the Biodiversity Conservation Act in New South Wales, where Ken Henry and others recommended that the legislation's objects be restated to talking about nature positive rather than focused on particular species. So what does it mean? And this is just a graph that I've put together based on what we do know about all of these different terms. So nature positive is actually quite different and far more ambitious than anything that we've done to date in biodiversity conservation policy. It's different to other terms like no net loss and net positive or net gain, because it refers to this absolute gain in nature relative to now, or rather 3 years ago, 2020, whereby in the future, 2030 and 2050, it means that if we are going to become nature positive, there needs to be much more nature in the future than there is now overall. What nature is, I mean, nature is all of the living and non-living parts of the natural world. But one of the risks associated with reframing from, species and ecosystems to nature is that we can now have some interpretation of what nature is. Does nature mean all of the individual species, or is it just more of a few different species? There's a bit of, ambiguity and wiggle room in terms of how different people might interpret what nature is. And so that's that green line above the x-axis. And if we compare that term to pre-existing terms that we have in biodiversity conservation policy. So there's someone there with their microphone on. I might just ask if everyone could check to see whether you got your mics on. So at the moment, no net loss, which is this orange line, no net loss is an existing policy requirement under the environmental offsets policy under the Environment Protection and Biodiversity Conservation Act. I should have put that here on the slide, but I removed it from another presentation. But at the moment, offsets for any threatened species or ecological community listed under national environmental law must deliver no net loss outcomes. And normally if you speak to someone on the street or anyone and they say, look, we're going to deliver no net loss, there's a good chance that person on the street or average person would go, great, okay, so we're going to have no net loss. That means, that's compared to before the impact. We've got a site, we're going to mine it, and we're going to deliver no net loss, which means that we're going to have, there's going to be an overall neutral impact of that mine or development, and we're going to compensate that impact relative to what the site looked like before the development. That's what I think most people would interpret that phrase to mean. But what it actually means is actually something quite different. And it is explicitly articulated in the policy, which no one reads still. But it means no net loss relative to a counterfactual or a scenario of what would have happened in the absence of the impact of offset of decline, because that's what our current scenario is. We currently have biodiversity decline. So to deliver no net loss, essentially that means to maintain existing trends. So when you hear people say offsets, it's a zero-sum game, or all it does is maintain existing trends, that's what they mean. It means, we are maintaining existing trends. We're not actually delivering an overall absolute improvement in nature at all. We're just maintaining current trends. So that's in the orange. And then there's another term, net positive or gain. Under the EPBC policy, it's, you need to improve or maintain, outcomes for the protected matter. A net positive or a net gain usually just means a relative improvement relative to that existing baseline of decline. So, that orange line could be slightly better than the orange. It could also be, up there with the green, but usually it means, improve relative to that existing decline. So we could become net positive by only really changing the dial a little bit. And the key thing that I try to highlight here is, because when we talk about nature positive and then we start talking about environmental markets, everyone gets very excited and says, well, environmental markets are going to be a key to achieving nature positive. Well, that depends. If you are selling credits or biodiversity credits, or that are then used as compensation for a loss and as an offset, then you're pretty much going to be keeping things within that trend underneath the x-axis. You're either going to be maintaining existing trends, no net loss, or achieving a net positive and improving that trend a little bit. But pretty much if you are selling a credit and that whoever is buying the credit is using that credit to compensate for a loss, that's not going to help achieve a nature positive outcome at all. The only way that selling a credit could enable a nature positive outcome is if that person doesn't use that credit to compensate for a loss, but rather retires it. So you're actually getting an entirely positive, absolute positive outcome. There's no trade to compensate for a loss. And this is the stuff, and this is why I haven't really focused too much on the opportunities, because if you speak to anyone who is in the business of environmental markets, who is wanting to, do business in that area, you won't hear this stuff. You'll hear, your standard opportunities of, you can generate income, you can get co-benefits, which is all absolutely true. But what I really try to articulate when I give these talks is that we need to understand the full context and the consequences of a trade. And I might just skip ahead to here, which is the key slide that I focused on in the regen event. So we talk about risks and opportunities. We mostly talk about opportunities in environmental markets, but the whole premise of a market, the way a market works, is that there are, wins and losses. There are risks and opportunities. And the key thing is that these risks and opportunities aren't borne equally by all market participants. There is, an uneven distribution of market power and influence in these markets. And there's some fairly fundamental things that aren't really articulated either. So if you sell biodiversity or carbon credits, you sell those rights. The whole point about a carbon credit or a biodiversity credit or a certificate is that there is a property right that has been created for that natural asset, which you then sell to someone else. And that, you make some money out of that trade, you get that opportunity. They then will use that property right in a way that may not necessarily contribute to a nature positive outcome. If they use that credit to compensate for a loss, then at best, we're going to be maintaining existing trends. And that's, what we see with carbon credits, and the majority of Australian carbon credit units are purchased by large entities under the safeguard mechanism. And because of the broader policy settings, where we've got a fairly, 43% reduction target at a national level, where all of that target can be met by offsets, we don't have other policy and legislative levers that is actually bringing total emissions down. So, when you sell those rights, and when I say you, I mean largely the agricultural sector, has been, essentially asked to provide biodiversity and carbon rights for more heavy emitters in the economy. The consequence of those trades at the moment, in absence of more stringent economy-wide policy settings, is that the sale of those trades largely continue business as usual. The other thing that I think, needs to be highlighted is that when, say, an agricultural producer sells carbon or biodiversity credits, as I said, they sell those rights. So once you sell those rights, you sell your rights to claim, carbon neutrality or biodiversity net positive, for your own enterprise. Yes, you get the co-benefits that you might get from doing that activity. But if you sell a credit to someone else, you can't then use that as a justification that what you're doing on your property is contributing to climate goals in your agricultural enterprise. That's double counting. So, I know that I'm sure there are many who consider me to be, stridently opposed to environmental markets or ideologically opposed to farmers making a living. I don't know. There's been a whole range of various claims put out, but all I really want to kind of emphasize is to think carefully strategically about in what circumstances, when, how much, and to whom am I best placed selling environmental rights to? Should I sell now, or do I wait for the price to go up? As a seller, should I conduct due diligence of who I sell my credits to? We talk about due diligence that buyers need to conduct. Why can't there be, due diligence on the other side of the transaction where, an agricultural producer who has, I think actually far more power in these transactions than what you may think, could you say, well, I will sell you these carbon credits, but, I want to see your transition plan, or I want to see, evidence that you are actually committing to an ambitious climate target, and these credits that I'm selling are only going to be there to assist you with your, residual emissions, rather than your entire kind of climate reduction or carbon reduction plan. And I think also we talk about environmental markets as the be all and end all, and it's strange because even some of the most, ambitious, with wild kind of generous assumptions of studies that I've seen, for example, the PricewaterhouseCoopers report that, made the news recently, or some international analyses that have looked at the potential for biodiversity finance. They all identify that environmental markets can only really provide a very small contribution to overall nature finance. The biggest contributor is dealing with subsidies, subsidies that currently harm the environment. We can very much improve financial flows towards nature if we reduced or got rid of all of the financial flows that work against it. So even though environmental markets overall are only a small part of this entire discussion, the entire discussion is dominated by environmental markets. And you can engage in this space without necessarily trading. I still think and noting that there is a cost barrier, I still think, things like environmental accounts are, a great thing to do. Maybe not necessarily to use to figure out how much, how many credits we might want to sell. That might be part of it. But it could also be, all right, maybe the big driver isn't necessarily going to be me exporting all of my natural capital to someone else. Maybe it's going to be, here's evidence that I am maintaining or improving the natural capital on my property, and I'm going to use that as evidence to maintain access to European markets, or to demonstrate to my bank that I am, keeping my own house in order in terms of nature or climate related goals. So I do have some other slides about, nature positive and what it actually means. I might just put one of those up now just to finish, but I might largely kind of stop talking because I'm a little bit tired of hearing myself speak. So yeah, final comment, there is a lot of discussion about nature positive, but it is a term that's being kind of diluted as something that just generally means something that's nice for the environment. And there are risks with that. And, the Australian government, how they've defined nature positive is really vague. It's not measurable. It's not time bound. So there is a risk, I think, of making this move towards, we're talking about nature positive, when there is a very big risk that this kind of ambiguity can potentially shield just continued business as usual, rather than how it was originally defined, which is there needs to be much more nature in the future than there is now. I can see a few questions in the chat, but I might stop now, if that's okay, Rachel.
Great. Thanks so much, Megan.